Right, I'm delighted to now be joined by Seeiso Matlanyane. Is that correct?
No, you got it, yeah.
Yes, I'm very, very impressed. I'm getting good at this.
You are.
He's from Prescient Investment Management. Seeiso, thank you for joining us, and welcome to the EBnet studio here at the IRFA 2025 conference.
Yeah, thanks for having me.
Can you explain just what your role is at Prescient Investment Management?
Right, yeah. So I look after the listed equity offerings at Prescient Investment Management. We invest in equities all over the world, so locally, globally, and we have a whole bunch of propositions that are suited for retirement investment. Hence, we are here at the.
Makes sense.
Yeah.
So you've got a stand here at the conference. Your intent at that stand is to share with the audience what exactly?
Yeah. So I think Prescient as a house has a very differentiated investment philosophy compared to what traditionally is common in the South African space, in the sense that we're very data-driven, very systematic. We leverage technology, which is it's got huge benefits and huge complementary elements to a traditional portfolio, which is why we need to showcase and bring awareness to this type of investing.
Isn't it interesting, though, that traditionally, maybe even worldwide, but despite differentiation or claiming your differentiation, it ultimately comes down to performance. Do you find that?
Yes. I mean, performance is sort of your ticket through the door. So you could be as differentiated as you want, but ultimately, is it doing what it's intended to do, what it says on the can? And luckily, maybe not so luckily, but we tick that box. So our process has been proven, it's been tested, and it delivers.
But the risk of differentiation is almost by default there's going to be times you're going to look different to everyone else, which is good because that's how you manage risk. But by looking different, your performance can sometimes not look as good as others at particular times in the short term.
Yes.
And that must be a challenge to help trustees or investors through those periods.
Yes, exactly. So, I mean, hence the complementary aspect. So we know that diversification is probably the only free lunch that you can find in this world. And we think that obviously you can't put your eggs in one basket. You can't follow the same philosophy, because if that philosophy doesn't work out, then everything blows out. Hence, our strategy, even though it is differentiated, it is very well constructed in the sense that we ensure that even when we are not like everyone else, we're not too far off. I always say that we are, if we were batsmen in cricket, we are, the steady, reliable guys that are going for, singles, and we'll maybe go for the 4 when it's there, but we're never going to go for a 6 and then risk getting completely bowled out.
You say you're not a T20.
No, we're not a T20. Exciting as it may be, and I think that's also the big challenge, is that this type of investing is more for cooler heads. I mean, the narrative-based philosophies are very easy to sell. I like X because I think this is going to happen, etc., etc. But when you are data-driven, and you don't always have a easy to digest narrative.
So I'm a bit older than you, I think. I'm pretty sure. Back in the day, the life of a portfolio manager in South Africa was navigating, and back then there was a lot more stocks, so there was 1,000+ stocks kind of thing, but only 100 or so were truly investable at the end of the day. Your job now as a portfolio manager in this world is quite different because it's spanning not just the South African public markets, which is a lot smaller and has shrunk a lot, but it's now globally.
Right.
How do you manage to do that from South Africa?
Yes, that's a big part of our presence here, and what the message we're trying to get across is that you can actually, if you have the right infrastructure and the right setup and the right philosophy, it works to your benefit, because we live in a world now where everything is data driven, where, ostensibly and realistically, a asset manager from our corner of the world here in Cape Town would be far stretched to claim that they have better expertise, especially in the global landscape, at picking stocks or analyzing investments in such an efficient global market. Hence, using data to sift through that and having the processes and the models to assimilate data is our key selling point, as opposed to hero fund manager type investing.
So are you speaking at the conference?
I am, yes.
So is it today still, or?
Yes, in about 45 minutes.
Okay, well then I shall let you go. I know you have a colleague that is here as well who we would like to bring in, and we can have a few words with him as well.
Yes. I've got two colleagues here. So Tian from our China team is here to talk about our China offerings.
I hope he speaks English, because my Mandarin's not so great these days.
His English is better than mine and better than most.
Okay, good. Well, thank you very much for joining us. I wish you all the best for your talk and for your future, and drive that performance forward. And we look forward to interacting again.
That's very kind. Thank you. I really appreciate it.
Thanks so much.
Cheers.
Right, I'm joined now by Tian, who's flown in all the way from China. Is that correct, Tian?
That's correct, Shanghai.
Right. Congratulations. Welcome to South Africa, and thanks for coming to the IRFA conference.
Thank you.
So what is it that you're doing here? What is the intent of someone from China coming to South Africa to attend a retirement conference?
So I'm obviously part of Prescient in their China setup, and we are of the view that China is going to be a big part of not just the global economic future, but the financial future in terms of financial markets. It's a $20 trillion market in terms of its equity markets right now. And we just want to communicate to local investors that this opportunity is there, and people need to start seeing it more, understanding it more, so that we can slowly begin to allocate more as sort of all the craziness happens in the US markets.
So the Prescient Investment Management team here in South Africa, which the local community will know and allocate mandates to and so on, do you bid for assets from them, or do you work with them in terms of allocating exposure to the Chinese market?
So we've got a standalone investment team there, but in terms of the FSCA licensing, etc., and our Chinese QFII license, which gives us free capital movement in and out of China, it all sits under the same company, Prescient Investment Management, and we obviously share investment ideas, but we have a dedicated research team that sits in China.
Okay, and perhaps an unfair question, so apologies in advance, but there's been obviously a lot of noise across the world, geopolitics with Trump in office, tariffs, trade wars, and so on, been spoken about. Give me the Chinese perspective. I've never heard it from anyone out of the Chinese market.
So it's actually surprisingly not as negative as the Western media plays it out to be. So I use tariffs as an example. The Chinese were a little bit shocked when tariffs got up to 125% at one stage before they came down very quickly, because it was both sides realized it was unsustainable. But from the Chinese side, what they call is that they don't want discriminatory tariffs, as in if the rest of the world are getting 20% and you hit us with 20%, we don't mind, because it's seen as more of a revenue generating exercise for the US Treasury rather than geopolitical fighting with the rest of the world. So right now, China's reciprocal tariff rate is only at 10%, lower than a lot of countries. So total additional tariffs this year is at 30%. There's those 20% fentanyl-related tariffs. There's all these political reasons of adding tariffs. But at 30%, China is surviving kind of okay. They've got a sort of a 10% additional duty relative to the rest of the world, but it's ultra competitive. What I'm going to talk about today, you're going to see the manufacturing scale and the transportation infrastructure scale. China is just absolutely irreplaceable. So people just cannot find replacements outside of China. It's probably not going to happen, maybe in our lifetimes, and that's our view.
So it's almost much ado about nothing at the end of the day that's going on. So the other one that's interesting, and maybe a bit of a selfish question of someone who's a little bit overweight in tech at the moment, but is there a tech bubble? Are we expecting a reversal at some point in time, or is it just simply a case of AI has come and it's the new revolution taking place?
So one big concern we have about the tech sector, and that's at a global scale, is there's still no clear way of monetizing all this AI tech that's coming out, and monetizing and making sure it's profitable for the long run. So right now it's just valuation multiples just increasing higher and higher. If we split and look at the two tech or AI leaders in the world, so it's the US leading by far with the most processing power, with the most startups, and then China not too far behind given the sanctions that they have. If we look at these two different industries, China is by far the cheapest there is. So in our view, the leader in Chinese AI is actually Alibaba, a big well-known name globally. If you strip out the cash of the company, you're looking at a PE, single-digit PE of between 8 and 10. Whereas if you look at the big AI companies, a lot of them are unlisted, but if you look at their valuations, or if you look at Microsoft, who have their Copilot, or the big companies with AI capabilities, the valuation multiples are 3, 4, 5 times as much. So we're finding a lot of attractiveness within the Chinese space, but that's not to say unreasonable valuations will not get even more unreasonable on the upside. And history, certainly has those episodes.
Yeah. So you mentioned that you're speaking today. Are you specifically talking to? Is it the offering that you have, or are you speaking more about the geopolitics and these kind of factors?
I think a little bit of geopolitics, largely more just some hard stats. So Prescient is a systematic house. We focus our investment research on hard data. So a lot of the political stuff is not as objective as real data. So I'm trying to present China from a data perspective in terms of economic data, in terms of financial data, and our view of how to approach investments into China. There's a lot of misconceptions about investing in China, and we like to bring the local perspective, both from South African and from a Chinese local perspective, with a little bit of a sales pitch of Prescient's capabilities.
Of course. Is this your first trip to South Africa?
No, I actually travel to South Africa quite a bit, probably 2-3 times a year. I'm not from Cape Town, but from Durban originally. So if you're wondering where my accent came from.
I was about to ask.
And then went to UCT, and then was in Cape Town until COVID. So I moved with the Prescient China team to China during COVID. So that was quite an experience. It wasn't the best starting experience for me in China, but I traveled here. I was here at IRFA last year, and this will be my second time speaking at IRFA.
And your Mandarin is perfect.
Oh no, far from perfect.
Okay, good.
Better than Afrikaans.
For sure. Anyway, Tian, thank you so much for joining us. We wish you all the best in your talk today, and please follow us on ebnet.co.za and let all of China know that EBnet exists, because that will boost our following as well. So thanks so much.
Great. Thanks for having me.
All the best.
Yeah, cheers.